Hello, everybody. Welcome to Tuesday. The S&P 500 was down 0.15% today. Not a terrible result considering how well things went yesterday. Matter of fact, the Nasdaq was up again today, which I thought was a nice sign of strength. However, markets were very flat today. If you look at the range, not a lot happening. And the CPI report coming out on Thursday is, I think, what everybody's waiting for. So going to answer some questions about when they might be lowering rates. The Federal Reserve has been talking about, later on in the year, June past, third quarter, whatever it might be. The market is expecting the possibility of some rate decreases in March. So I don't know. I think the Federal Reserve might be more correct here. The market might be a little aggressive. Rate decrease would be coming because of a recession. I don't think that's going to come through in the numbers, in my opinion, by March. The other reason might be some sort of a deflation where prices are dropping. Fed would lower rates for that. They would go after that. As consumers, we like prices dropping, but businesses have a really hard time operating in that environment. They paid a certain amount for the goods, and then by the time you buy them, the prices are dropping. That's a really problem for profit margins. The Fed would, react to that. And if you look at the last 6 months of inflation for the CPI or the PCE, the two big measures of inflation, and you just kind of annualize those out, they're both at around 2% or slightly below, which is the target that the Federal Reserve is looking for. If all of a sudden that target starts to look like it's 1% or 0.75%, the Federal Reserve might start to react and lower rates to make sure we don't end up in a deflationary environment. So we'll have to see how this plays out, but that's why this report's somewhat important. I wouldn't consider it critical. I really think that the overall situation for the market is just the fact that, we're kind of stuck between two levels, the all-time high that we almost got to at the end of last year. And then there's a level right below that where you had a bunch of resistance support, that we bounced off of just on Thursday. So we're kind of in that range right now. It's kind of a smallish range, but that's needs a catalyst to move one way or another. I think the catalyst to the upside could be something like the CPI report. So it comes out, CPI report's better than people expect, or at least, meets expectations, and boom, we move forward. Probably needs some kind of catalyst like that to get through to this new all-time high. So Thursday could be important. We'll see how that plays out. But anyway, that's what's going on now. Look forward to talking to you tomorrow. Thank you very much.